Committee on Audit come to order. Madam Clerk, roll call, please. Thank you.
Commissioner Colleen. Commissioner Dobb. Here. Commissioner Clark Coleman. Commissioner Kniezek. Chair Basham.
Here. Next
No.
item.
Chair's remarks. C, approval of the July 13th, 2022 meeting minutes.
Move approval, Mr. Chair.
Moved by Commissioner Clean. Can I get support? And support by Commissioner Dobb. Any discussion? All those in favor? All those opposed? The ayes have it. Next item.
D, unfinished business. There is none listed.
Okay.
Item 1, under new business, presentation by Department of Management and Budget on the results of the fiscal year 2021 annual comprehensive financial report.
I'd like to at this time introduce our Auditor General, Ms. Marcy Cora, her staff and her guest. And Ms. Cora, please proceed.
Marcy Cora, Auditor General. What you have before you today is the 2021 Annual Comprehensive Financial Report highlights. And I'm going to turn it over to the Department of Management and Budget. They can introduce themselves and then go through the presentation.
Mr. Chair, may I proceed?
Absolutely.
For the record, this is Huey Newsome, Chief Financial Officer for Wayne County. Greetings and good morning to you, Mr. Chair, and to the rest of the members of the committee, as well as commission staff. We are here today. I'm going to introduce my colleagues in a second, but we're here today to talk through the highlights of our annual comprehensive financial report for fiscal year 21. Before we get into that, I do want to, set the tone for this conversation. I think that, on behalf of the county executive, I want to, and these numbers will show, the fiscal strength of the county remains strong, right? And so, one of the things that we've all worked towards, the county executive, his team, commission, as well as other members of our Wayne County team, we work very hard to get ourselves out of receivership at the beginning of this administration. We continue to keep our eye on the fiscal solvency and being fiscally responsible. We see COVID in the rearview mirror, but now some of the challenges we have to face on top of remaining solvent and strong fiscally is making sure that we're addressing some of the operational challenges with the vacancies, and we'll talk a little bit about that. And then also making sure that those vacancies don't spill into control issues, as we are also caretakers of the county's assets. And so with that, I'm very excited to bring forward my colleagues here, Yogesh Kasani, who is the Deputy Chief Financial Officer, Graham Smith Court, who is the Director of Financial Reporting, as well as Drew Vandergrift, who is the Budget Director for the county. If I may hand it over to them, Mr. Chair.
Please proceed.
I think Yogesh, you're first.
Can you hit your button? There you go.
Good morning. Yeah, okay. Good morning, Chair and other commissioners. My name is, like Yui said, Yogesh Kisani, Deputy Chief Financial Officer. And what we have today is, highlights of fiscal 21 ACFR highlights, so to call financial statement highlights. So I'll go to the presentation, and we have a team here. As you just mentioned, budget director and finance director. So we're just splitting some of the presentation based on our expertise in some of the areas. So, okay, I'll just go with the presentation. Can we move to the slide 2, please? Can you move So first one, it's a fund balance. And again, as we have been going through a financial solvency for last 5 to 6 years. Again, general fund balance increased almost by 46 million over the prior year. At the end of the year, fund balance went up to 261 million. And obviously, we had some issues with Treasurer's Office, which they recognized 22.9 as an adjustment for our undistributed taxes. And again, it wasn't just an error, but it was a part of our new Gfgp pronouncement, what we call it Gfgp 84, where there's some transaction treatment has been different compared to a fiduciary versus we can recognize some of the revenue now. So, and that has been corrected. And we are definitely hopeful that for the fiscal 22, which is current year, is going to be okay. And we are working with the Treasurer's Office closely on this matter. We may have some impact, again, Gfgp 84, that's going to go for another year or so. Again, at the end of the current fiscal year, all governmental funds, what we call it general fund, and all other governmental fund, what we call it combining fund balance, is a 773 million, which some decrease about 46 million over the prior year. Okay. Can you move to the slide? Next slide, please. Talk to the fund balance, and I'm sorry, I had a topics. I'm just looking at mine, so. I apologize. So this fund balance I talked about, but I'm going to repeat this. I was on a topic one and I could not look at it over there. I was just looking at my own laptop. So I'm just going to repeat fund balance increased by 46 million. And again, with the Treasurer's Office not recognizing $22 million for some of the adjustment of prior period undistributed taxes. That's part of that. And counties overall governmental funds combined balance 773 million. Can you move to the slide? Next slide, please. I'm sorry, it's just too far that I can't see numbers, so I have to see my numbers here. And this slide tells you our composition of fund balance. When we say this is our total fund balance, how the fund balances are being distributed, so to speak. So first one is a non-spendable, which is part of most of the inventory prepaid that's not available to us. Those are kind of restricted. And then there's a restricted fund balance, which is pretty much from an restriction from an outside parties, capital projects, road funds, which we know money comes from MDOT, which is totally restricted for that purpose. Debt service for debt payment, health and welfare, and some of the COVID money in there, for any unexpected events related to our healthcare. And there's other one, restricted purposes, 54 million. We have assigned fund balance, 184 million, and then committed fund balance, and that is 13 million is related to our Third Circuit Court that we're just trying to report as in a separate one. And unassigned fund balance is 230.6 million at this point, which is did go up compared to last year's. Can you move to the next slide, please?
Okay, perfect. So now I'm going to go ahead and talk about some of the fluctuations from 2020 to 2021 on the actual side.
I'm sorry, can I, Commissioner Clean had a question or comment.
Yeah, thank you, Mr. Chair. The previous slide before we leave it and go further into the report. Restricted funds are self-explanatory. What falls into the category of assigned fund balances? What kinds of things are in that category? What makes them assigned?
Assigned fund balance is some of those are like a future raises. Some of the prosecutors,
If you could speak into the mic, sir, and I was trying to, because I can't hear you. When you...
Yeah. Okay. Yeah. So that's assigned fund balance includes some of the future raises that we talked about. Some of the think prosecutors, rape kits and some of the others are, but I can certainly provide a detailed list on there. But those are the two items that just comes to my mind at this point.
You speak to a couple of things that are where we're assigning that money.
So, yeah, so again, prosecutors, rape kits, that's coming for last year or two. And again, future raises, for a CBA bargaining units. And I don't have at this point much detail on there, but I can certainly provide that detail.
That answer your question, Commissioner Kling?
I think there's more information coming,
Yeah.
Mr. Chair.
Sorry about that. Sorry about that. Okay. Sorry. Right, okay, I'm sorry. Commissioner Killeen, I'm sorry. So assigned fund balance, 12 million was a general government. Out of that, 58 million was in a COVID-19 fund, and 46 million was in a CJC. So
We have assigned dollars there, but have yet to spend them.
that's correct. So CJC is part of, some of them part of, if this is a restricted for construction, and then there's some of them assigned fund balance as a part of, other activities in a CJC.
I'm just trying to understand the terminology here and what goes in each category. So what is a committed fund balance then? We've committed 13 million. Where have we committed that?
Committed is basically a part of an unassigned, but we just, since last 2 to 3 years, we have been reporting separately because that's a part of a third circuit court that we are just trying to report separate.
Say it's a part of unassigned?
It does play a part of an unassigned, yes. It's,
So if I may, Commissioner or Mr. Chair, when we talk about Third Circuit Court, that committed number, if you will remember, we have the agreement, the funding agreement as a result of the settlement with the Third Circuit Court. And so that fund balance that is designated for their use per that agreement, we show it as committed in the financial statements. I believe, Yogesh, that's correct. And so that's the line share of that 13 million that you'll see there.
Thank you for that. And I wish it came with the detail that you're talking about now, just to understand where all the money is laying and what's committed and what's not. So then unassigned fund balances, how would you define what they are?
Unassigned, unless do you want to say it, or I can go ahead? Unassigned is just an unassigned. That's our general fund money at this point. Unassigned is 230 million, which is not assigned for any other purpose at this point.
So if I may, Yogesh, Mr. Chair and Commissioner, if you think about it from this standpoint, the rating agencies, this is kind of what most people refer to as our rainy day. It's not assigned, it's not committed, it's unrestricted. Most people refer to as unrestricted. We refer to it as unrestricted, unassigned. And so that number is what the rating agencies usually will refer to sitting in the general fund as money that can be used for any purposes if we get into trouble. And obviously we've never spent and dipped into our quote unquote rainy day fund and it continues to grow. I don't know the exact number off the top of my head what it was last year, but I know it was 45 million less than what this is now. So going back to my original, to what I was saying before, this number continues to grow as we continue to, store nuts for the winter, so to speak, as we, start thinking about what a recession would look like. So that's the way to think about unassigned. Think about it as unassigned, unrestricted.
And one more question on that, if I may, Mr. Chair.
Sure.
If we're going to call it a rainy day fund, do you have a target for what should be in there when people budget? You know, they go, it's so much percent of our overall. Is there a target you're trying to reach with the rainy day so we do have the cushion should we need it?
Our goal for, and you'll see this when we present the budget next week. Our goal generally is to have a budget that stands by itself, so to speak. And so what we usually try to do is about $2.5 to $5 million in the general fund. We will underspend our revenues by that much. And so it's almost relatively a flat budget, so to speak. Particularly now because we need to figure out how to get our compensation issues addressed. And so what we target is a flat budget. And so the target is to maintain that fund balance. But then obviously with vacancy savings, if we have, you know, a significant number of vacancies, then that could add to it. Along with revenues coming in, you know, larger than normal. This year, I have to remind you this year that because of the prior period adjustment, this number went up partially because of the prior period adjustment, because of the issues at the treasurer's office. So, but generally speaking, we shoot to not add to, not take from this number.
We can expect in the presentation, in the budget next year, this number will stay relatively flat.
Yes, for budgeting, right? Exactly, for budgeting. Now, when we come back a year later and show you the actuals, you know, hopefully we won't also be telling you that we delivered an increase to this number because we weren't able to hire people. That's our goal for the next 12 months.
Thank you, Mr. Chair.
Please proceed.
Perfect. Thank you. All right. So now if we move on to the next slide, I'm going to talk about some ACFR highlights on the actual side. So these are revenue and expenditure variances from fiscal 2020 to fiscal 21. So overall, general fund revenues increased by approximately 31 million, which is a pretty nice increase considering the prior year we had a decrease of 48 million. Of that $31 million increase, 12.9 was related to state sales tax revenue, an increase there, which is the result of people going out and spending more money. And then in addition, we had 6.3 million of an increase related to state source revenue, which is really the result of personal property taxes. If we go on to the next slide, we also had an increase to other revenue by 5.7 million. And this was the result of the GASB 84 implementation. So we talked about implementing that new GASB standard, and that required us to record certain things as revenue that were previously fiduciary activities. So now it's a gross up of revenue and expenditures within the fund financial statements. So these are now being presented here, and those include things such as bonds, restitutions, permits, license, and fees. And then overall expenditures also increased by 41 million, which was a 12.5% increase from the prior year. And the most notable changes within those expenditures were the COVID-19 pandemic related expenditures.
The next one is a debt. And as you know, county is in a very strong position on our debt as far as look at the total outstanding was an 810 million, significantly below 6.1 billion. That's our statutory debt limit. And again, the second bullet, we are just highlighting what's our debt comprised of: general obligation bonds and other bonds. And as you know, during the year, we have refunded 2010 Gracious jail bond, and we are refunded with 2021 bonds that we have discussed that in our last building authority meeting. And I provided the details how Wayne County has issued 2021 bonds by refunding 2010. At the end of the current fiscal year, as you can see, our debt decreased by 3.2 million. And the good news is our rating with our bond rating with all agencies are kept on going up for last almost 4 or 5 years. At this point, our last increase was A3 with an S&P even, or Fitch. So we just came along in last 5 to 6 years very strong, and our fiscal solvency, as a CFO just mentioned in beginning speech. Can you move to the next slide, please? Let's say continue COVID-19 pandemic impact. As we know, it's 2021 fiscal year is much better than 2020, but still, this is something compared to tourist tax, is still what we budgeted compared to is still coming out less. And we are hope to catch up in 2022. But tourist tax is less, and then second bullet is COVID-19 response, and this is where we are pretty much listing out our CARES Act money as well as our funding that we have received under the ARPA Act, American Rescue Plan Act. And that's where there were some of the programs that we are running, emergency rental assistance program to help out the county citizens, who are suffering from other issues. So we have received the first chunk of money, and also I think second chunk of money. Yes, we received another 169 million, I think couple weeks back. And we are still waiting for ERAP, Emergency Rental Assistance Program, which is a part of state and local recovery fund, which is a part of American Rescue Act money. So I thought that's just still we have some continued COVID-19 impact.
Commissioner Kleen has another question.
Thank you, Mr. Chair. On that COVID-19 response assistance, does any of that money go to administration? And if it does that mean when the COVID money ends, we're going to have to do some cutbacks on administration? Is any of that temporary? Well, are we spending it on administration, and will we have to pare back administration when the money runs out?
Mr. Newsom, go ahead.
Mr. Chair, if I may, through you to Commissioner Kleen. So we were very careful when we did the fiscal 22 budget. And even now, we haven't presented yet, but we'll present next week the 23 budget. We made very sure that these dollars went to incremental programming and did not go to normal county operations. The danger obviously is if you start paying, kind of learned this lesson with the fiscal 21 budget, but if you start paying recurring operations with this COVID money, then you're going to be in trouble. So even though it's a very difficult task to balance the budget without this money, is just big pot of money sitting there, we did it twice. In 21, when we did not know what was going to happen and we were in the midst of COVID, we ended up integrating COVID-19 dollars into the normal budget. And we learned a hard lesson in 22 as we had to pull that money out and still fund normal county operations. So 22 and 23, those budgets do not include for normal recurring operations any COVID-19 money.
So the answer is no.
Correct.
Thank you, Mr. Chair.
Please proceed.
Move to the next slide, and I think our Drew will take over.
Morning, Chairman Basham. Good morning, members of the Audit Committee. I'm Drew Van de Griff, Wayne County. We thought that it would add context and meaning to the 2021
Could you
audit
talk to
review.
your mic a little bit? There you go.
To the audit review. Can you hear me all right?
Yes.
Very good. We thought it would add context and meaning to the 2021 audit review if we discuss not only the amended budget in 2022, but also the expectations for our recently developed 2023 fiscal year. In the bullets, you'll see an increase of $30 million in change for the county's general fund budget. So I hasten to add that that is everything in the general fund budget. So that includes each strata of restriction that Commissioner Kleen, your question was drawing into focus, right? So that includes, unrestricted revenues, assigned revenues that are earmarked for something, committed dollars that are restricted either by commission action or by contract, and then full restrictions that often are grants that must be used for a narrow purpose. You're sitting behind me, so I can't see your face to see if that was an adequate answer to your question with regard to 2023. Very, very good. So you'll notice with interest the increase in the general fund budget that is proposed for fiscal 23. Moving to the second bullet point, we'll see this is the GFGP revenue. So this is backing out the restrictions. This is only unrestricted GFGP dollars. So these are the dollars that are they have the broadest potential use for the county. And so it's an important metric. If you compare the $425.7 million on slide 10 with the previous slide, you will note something on the order of an $18.8 million increase year over year. And it's not on the slide, but it may interest you to know that the county's general fund, operating tax revenue, the largest tax revenue that is a component piece of the GFGP, is also projected a modest increase to $312.5 million. It was about $309 million for fiscal 22. So that represents the ambient appreciation in the taxable value that we can levy against. Lastly, for the 2023 recommended budget, the county expects to receive an increase in state revenue sharing, also a critical and material component that contributes to unrestricted GFGP dollars for deployment during fiscal 23. And so that number has increased, which is good for our budget. It's also a bullish sign that the state projects its ability to pay. That is based on economic factors that I'm sure you appreciate as well. Very good. So I may have taken these slides out of order. I think I spoke about 23 first. We can turn to back one page to 2022. So this is, of course, the fiscal year that we are currently in right now. Much of this I think I did touch on because I was speaking in relation year over year. So I won't belabor the point other than to briefly point out the different numbers. So county general fund budget for this year, 577.4, which was a decrease from fiscal 21. The 406.9 GFGP revenue, that was the totally unrestricted value that I mentioned for fiscal 23. And then for fiscal 22, our revenue sharing payment is less than the state projects for fiscal 23, but still a significant amount of $52.5 million for this year. Thank you.
Thank you, Drew. Can we put, okay. These are the two charts that obviously we do present this in our financial statement too. So I thought it would be helpful to look at that. Still, our general government still spends at 31% of our expenses. And just want to highlight, general government and health and welfare still almost 21% of our expenditure overall. And rest of them are, small community and economic development, highway and street, which is again, a part of our MDOT, almost 14%. And so just wanted to give you a little, a chart depiction of our counties and expenditure. The next slide, please. And that's revenue by source. Again, same like we talked about expenditure. At this time, it's just revenue by source. So I'm sure biggest revenue is still property taxes. Then comes up with the grants, operating grants, 36%. Property tax, 31%. Sales tax, which is a part of our revenue sharing, it's a 5%. And rest of them are pretty much on and off. Any questions on this? If not, then we'll move to the next slide, county head count, which is again, Drew is our budget director is going to.
Glad to speak to it, Yogesh. Thank you.
Thank you.
Before you on slide 13 is a summary of the actual staffed positions, the budgeted positions. At this point, I would note or remind everyone that as a matter of course, we budget for all positions in Wayne County, regardless as to whether they are currently filled or not. So we budget for active positions. And so that is what produces the third column, the variance. The variance column could just as easily be labeled vacancy, the difference between the actual human beings in a position and the number of positions that were budgeted. It is stratified by department and then CEO, executive departments, as well as elected offices. With a couple of exceptions, you will notice with concern the number of vacancies and the increase in vacancies year over year. I know firsthand that the administration is working diligently to address this issue, to increase staffing countywide. But we must report the figures that have moved in the other direction to the tune of 95 positions. These numbers are generated from our financial records that we use within the Department of Management and Budget. And there is a degree of play between different databases in the county. Human resources may have numbers that are very similar, but slightly different. But the value of the slide is to concisely communicate to you how many positions are filled, how many positions are budgeted year over year, and the frankly alarming status of vacancies in Wayne County.
Let me jump in on that if I can. We got like roughly administration, they got like a $230 million fund balance when this is all said and done. Are we going to use some of that for like salaries for our competitive positions and things like that? And to that point, while I'm at it, there's a number of people with experience that have 15 to 25 years experience, for example, in the sheriff's department, that are ready to leave. And there's been a number of discussions about the drought program and things like that. So even though they're not listed as vacancies right now, they're going to be vacancies if we don't get a serious look at this and have a serious discussion, because it's not just bodies, it's like talent, experience, and those sorts of things. So this is a more complex issue than just the numbers. So your listed vacancies is one thing. What we're actually going to have is people leaving. And to that point, Commissioner Dobb had some questions or comments.
Mr. Chair, it's not really to that point. So.
Oh, I'm sorry.
Sorry, I just had a
I'm
question
really not
after
sorry,
you.
but
Thank you.
go ahead.
Did you, oh, okay, I'll ask it. Thank you. How often are the budgeted number of positions for each department evaluated?
Bob, thank you. That's an excellent question. So, every year as we develop the budget, we ask the departments in the Part 2 solicitation, where my division directly asks every department in the county, what do you project your budgetary needs to be? And an outsized portion of that pie is the cost of personnel. That is a large piece of that. And we specifically and expressly ask every department to review the positions that are presently available, because there's a certain inertia to these things. There's a tendency, a human tendency to say, well, what has worked in the past, that should be my number. And there's of course a hesitancy to reduce positions. But the trick here, and I think this is hand in glove with the comments of the chairman, is that we could imagine a scenario that would be budget neutral, whereby positions that perhaps never will be filled could be closed, which then would free budget to be deployed over the remaining positions, representing an increase. We would be certainly willing to review. You had specifically mentioned, Chairman, I believe a deferred retirement option program within the sheriff's office. Those conversations become possible to have when we get our hands around the true number of positions that are necessary for efficient operation of the mandated functions of the county. And so, the considerable variance between what we budget and what we have suggests that the future review is necessary. And so, I hope I'm directly answering your question. This is drawn into stark focus during budget development, Commissioner Dobb, when we ask ourselves, how many positions should we be budgeting? Throughout the year, that opportunity to review and right size the staffing for any department is never foreclosed. Right? My staff and the staff of personnel, HR, we stand ready to close positions, to swap positions, to adjust the budget through budget adjustments to what is necessary, to achieve the goals. I think this comment would not be complete without my recognition that the compensation profile for most of the employees in the county is a function of collective bargaining, which is not something, unfortunately, that I can simply budget and make come true. This involves negotiation with unions. So I think there's a lot of things in this conversation, and I don't have the answer today, but I know that we are diligently reviewing how we can reshuffle future budgets, change the budgeted positions to better satisfy the needs. And I would also acknowledge that we have been increasing pay. So a round of collective bargaining across the county was accomplished, and most of those contracts contain multi-year increases in wages. And I know that because I and my staff have just gotten through budgeting the increased cost for fiscal 23 and projected for fiscal 24. So I would want to acknowledge that as well, that we are looking at wage increases for fiscal 23 as we sit here today.
And as an old former bargaining committee man for the UAW, I understand the contract. I remember our contract says management has a right to manage and the union has a right to question. So actually, at the end of the day, in this case, it'd be the county who determines the budgets, and then the union will determine whether wages and other things. But the union has a right to question whether it's enough, and so on and so forth. So I've never heard of a union yet ever complain about increase in wages for employees.
I'm sure you're right, Chairman.
Thank you.
Mr. Chair, may I
Yes,
follow up
Commissioner
with
Dodd.
that? Are there ever any problems with union negotiations in reducing the number of budgeted positions in order to increase wages?
Commissioner Dobb, I am not the best person to ask about the status of labor negotiations. Perhaps we could, forward your question to labor relations, because I must say I simply don't know.
Okay, thank you. Thank you, Mr. Chair.
Okay. Commissioner Coleman, you had something?
Yes, thank you. I often go back to the fact that what many what brought many people to Wayne County initially back in the day were the benefits. And benefits in many cases are probably more important than salaries. I know that, and I'm going to give an example of my next door neighbor who was a plumber. And he could make a lot more money as a plumber, but he worked for the city of Detroit because they provided great benefits. So we took a beating with our benefits package. And I firmly believe that if you concentrated on trying to bring our benefits back up to a level, at least what they used to be, you might find that you can retain and recruit more employees. Because I asked my next door neighbor, who was a plumber, why would you work for the city of Detroit when you can make more money working as a plumber privately? And he said, I need benefits for my family. Benefits are more important to me at this time than making more money. So I'm just giving you an example of what attracts people to county government. Not necessarily the salary, but the benefits. And I don't know why we can't concentrate on doing something or spending some time trying to restore some of the benefits that were taken away at a time when we were trying to balance our budget. That's it.
Now Commissioner Kleen wants to add to this conversation.
Thank you very much, Mr. Chair. And I'm going to echo a little bit here what Commissioner Clark Coleman is talking about. So I note on the sheet here that we have 95 fewer employees than we had beginning of the year 9/30/21. And I realize I have management and budget here and not HR. Are there exit interview done of employees about why they leave? Are we collecting that kind of data as far as you know?
I believe that is done. I don't know if it's done uniformly, Commissioner, but I am aware of conversations that have happened post-employment.
Okay, a few things I've been hearing from employees, people that reported into their workplaces during COVID were promised, as far as I understand, some sort of a bonus for showing up in person rather than remote. And there's some disgruntlement that was never paid. Are you aware of this issue?
I'm not, Commissioner. To my knowledge, we have delivered all announced.
They have been?
Well, I'm not certain that you and I are speaking of the same thing. You may be speaking of something that I'm unaware of. I'm just sharing my knowledge that the hazard pay that was announced during during the worst of the COVID-19 recession, that was paid, though it's always possible that you're thinking of something that I'm simply not aware of.
Mr. Newsom.
Yes, if I'm, Mr. Chair, to you, to the commission, through you to Commissioner Killeen, all of it, my understanding is it all has not been paid out, every single dollar, because each one requires a back and forth with the union in terms of who's eligible for it. And we have not worked out with every single union who's going to be paid. So I know we're progressing through it, but I don't believe that every single dollar's been paid out yet.
And I understand that give and take with organized labor, but when we're looking at retaining people, those that haven't, they might not care what the discussion is. They just don't know. They just know they don't have it. And in this effort, and this goes back to what Commissioner Clark Coleman was talking about. I get a lot of feedback on the health plan that got switched to a high deductible health plan, and particularly for families that have dependents, it's been quite a burden. Have we discussed it all going back to and getting the cost for a lower deductible health plan, which would make the environment more attractive for people to either come here or stay here? Because we have had a lot of brain drain, people leaving. So the question is on a low or lower deductible health plan. Has there been discussion around that in addition to, or for some people, a better health plan is good or better than a raise? So what's been the discussion around that?
We have discussed retention and attraction from every perspective we could imagine. And, it is my desire to provide every benefit that the county can sustainably afford. And so, there will not be a philosophical objection to the conversation you're asking about, but I feel it's my duty to observe. If you look back to slide 10, we must service our perpetual expenses with perpetual revenues. Otherwise, simply arithmetically, we will be deficit spending. And so as we look at slide 10 in relation to slide 9, my thought process, Commissioner, is how much more revenue do we have? And that dictates how much more liability we can absorb. And so, what you'll see is that, it's good news that we are projecting increased revenues for fiscal 23, but it's not so much that we can contemplate enormous additions of liability. And so, for example, the second bullet represents an $18.8 million increase year over year. And so my recommendation would be that we discourage the commitment of a liability beyond our increases in revenue. I also must say that there is a increasing probability, as reported by economists and institutional investors, that there may be a recession in the next 24 months. And so the current trend of our revenues, we would expect to reverse as the business cycle changes. And so we
jump in on that one.
Yes, sir.
I watch all the national news, and some parties say it's going to be a recession, and the other party says it's not going to be a recession. So that's a hypothetical too. Also hypothetical, this is a little less than hypothetical, but we're currently paying the Sheriff's Department a tremendous amount of money in overtime because we don't have the people to pay in straight time. So all those discussions have to be had too. But the hypothetical depends on the party you're in. I'll leave it at that.
Oh, yes, sir. I agree with you. I feel an obligation to prepare for the possibility.
Okay. Ms. Coleman.
Mr. Chair, if I may
So-
continue on that.
Ladies first.
So getting back to the point that Commissioner Dobbs made. Okay, so you have these positions that are not filled. And so at the year end, you have more money. Wouldn't it make sense to perhaps pay more money and decrease the amount of positions? Because you're not filling them anyhow. But you might be able to attract. People are forever coming to, at one time you could not come to Wayne County and lure people away from the county to other places because we were competitive. We are not competitive any longer. And that's why we can't keep deputies. We can't keep clerks because we're not competitive. And if other municipalities can afford to lure our employees away, then that means that they're doing something that we're not doing. And I just really believe that if you've got all these positions that remain unfilled, then that means that you could very well use some of that money to either make the positions more attractive by giving them a better salary or better benefits. Then we wouldn't have this problem. I think that people would work for harder. I just think that we're doing ourselves a disservice when we have deputies that are forced to work overtime and be away from their families. When we should be able to fill those positions. And if we were competitive, we could fill them. We're not competitive. And I don't, maybe I'm just simplistic, and I'm dealing with people who, you know, have all the knowledge based on data. But to me, it is not, I mean, it's not that, it shouldn't be that difficult to figure it out.
If you want to respond briefly before I recognize Commissioner Kling.
Commissioner Clark-Coleman, I agree with you, and I observe that the administration agrees with you that we should be examining our budgeted positions. We should be right-sizing in those positions to pursue a budget neutral adjustment. But there are many, many details involved in that, and that is the work that is being done right now, is to understand exactly how many budgeted positions are necessary and which positions, right? Which positions are necessary here and there. And I agree with you. I have no interest, Commissioner, in perpetually budgeting positions that will not be filled. I want to budget for expenses that we anticipate we will incur in the next year. I don't want there to be variances between what we project in our budget and what we actually see when we do these audit presentations. And so I agree with you, certainly on a philosophical grounds. And we are working on that.
Commissioner Kling.
Thank you, Mr. Chair. I'm going to return to the health plan here for a minute. I do acknowledge that wages have been going up in the county. I think we all realize that everybody here today realizes that if we have kind of a weak workforce, we are not going to be able to provide the quality of services that Wayne County residents have every reason to expect. And so this is delicate. We are not, you know, when we look at our bond ratings, we still got a BBB+ from one agency. As I like to tell people, we have a nostril above water, finally. But if a canoe goes by, the wake will put us back under. So I do recognize the tenuousness of our situation. But in order to make good decisions, and here's where I'll come back to the health plan. Yes, there'd be increased liability with a low deductible health plan, but in this discussion, wages versus benefits and how we do that, have we costed out a couple of lower deductible health plans? See, this is what I need as a sitting in my job. Is some actual concrete, not just, well, our liabilities go way up, and they do, but concrete numbers. If we went to a lower plan, first of all, do we know from employees that the health plan that we currently have is a disincentive to be working in Wayne County? And at a lower deductible, how much that would save employees and how much that would could in effect substitute for a wage increase, and what the overall impact, financial impact on the county that would be. So have we costed that out and done the kind of analysis I'm suggesting here so that when I look at it, I can understand in dollar terms really what it means for the county to go in that direction?
Commissioner Killeen, I would like the opportunity to review what has been examined with the Benefits Division and with others that likely know more than I do about the current examination of the menu of healthcare plans. I will thank you for your metaphor of one nostril above the water. That is, there are competing interests here. We have the solvency of the county, where we have appreciable but revenue increases that are not enough to service a return to the pre-2015 healthcare plan. But you're asking about, well, is there a intermediate option that can be considered? I'm confident that many options have been considered. And if it suits you, Commissioner, I'd like to investigate this and report back to you as I'm able.
Because again, and I thank you for that, but again, we kind of talked a little bit in generalities there. And as a policymaker, to make good decisions for the county and to make decisions, I can stand before either county employees or county taxpayers and say, I made this decision in the full light of knowing what the options were and what the costs were. And so that is what I'm looking for. Not, I understand we have all these competing interests. We don't have, just this huge pot of money that we can just play with. So in terms of getting presentations, that I would like to look at all these options and then see why the one or two options are being recommended by the administration in a budget, as opposed to other options. Otherwise, we just talk about this endlessly if we don't bring it down to here's the options. This is how we costed them out. This is why we're going in this direction. If we're only presented with, yeah, we have to go this way, but without seeing the financial impact of going in other directions, then the conversation just goes on and on. So that's the point I want to make here. Let's look at these things in real numbers, including the suggestion of reducing the positions in order to increase wages. What can we do there? I understand there's all sorts of, because there we have to talk with organized labor. There's all sorts of, none of this is straightforward, but I'm trying to make it as straightforward as possible, again, for good public policy decision making.
Thank you,
I'll leave
Commissioner.
it there, Mr. Chair. Thank you.
Good. Moving right along. Please proceed.
There are no other items for discussion or questions from the commissioners.
Perfect. Thank you, Drew, and everyone who contributed to that conversation there and all the wonderful questions and answers that were provided. Looking at this slide, we're going to take another look at the year-over-year changes. So this is just in a little bit more detail than we had on the previous slides, but it is really a reiterance of the same data. So as you take a look, we have fiscal 21 on the left and fiscal 20 on the right. So going down, some of the notable increases were $12 million increase for state sales tax revenue. We also had a $8 million increase for state sources, which again is the personal property taxes primarily. We also saw an $8 million increase for charges for services. And other revenues also increased by approximately $5 million, which is the implementation of GASB 84 and that new accounting pronouncement that was released. There are no questions here. We can move on to the next slide. And this is a 5-year look back of the general fund balances broken down into the respective categories. So I know we had touched on these previously. So this is just another way to look at how they've come across over the last 5 years. So if you take a look, all of the buckets, non-spendable, restricted, committed, and assigned are relatively flat change-wise year over year. And the majority of the change is going to the unassigned, which means simply that it is the portion of fund balance that is neither restricted, committed, or assigned. So I know we spoke in quite a bit of detail on this previously, so I won't go into too much more detail here, but if there are any questions, we'd be happy to take them.
Commissioner Kleen?
Thank you, Mr. Chair. On the general fund activity chart, second to last, I was really surprised to see that property tax revenues were flat from 20 to 21. I know we've been talking, maybe it's more in this fiscal year, this housing market that's just going, well, starting to flatten out now, but it was just going gangbusters. But the property tax collections were flat going from fiscal year 20 to 21.
So it looks like there was a $1.5 million increase, which is relatively flat compared to some of the other
Yeah,
fluctuations.
as a percentage basis, that's flat as can be. Do we have projections for what that's going to be in the budget you're going to be presenting in a week or so?
This is Yogesh again. If I may say, we are working on the 9-month projection as of June 30th, but we don't have that data at this point as far as collections because our treasurer's office are behind in some of the cash posting. So we are working with our treasurer's office to get all the final data by June 30th. We should be able to get that in the next couple of weeks.
I was stunned to see it flat from one year to the next. It would be an understatement. So, okay. Thank you, Mr. Chair.
Please proceed.
That actually concludes the presentation that we have.
Can I get a motion to receive and file?
It's just a presentation.
I get support?
It's just a presentation.
Sorry. No action either. I'm sorry. I'm getting ahead of myself. Next item, Madam Clerk.
F, such other matters as may be properly submitted before the committee.
There are none.
Public comments.
Is there anybody from the public that would like to comment? We unmute everybody. Anybody from the public that would like to comment? Going twice.
There's a hand raised. It says Buffington.
Oh. Buffington, please want to speak?
Yes, if I may, thank you so much, Your Honorable Commission. Just to point on a couple of things that were indicated. I know you don't answer questions, but when they come back with their next presentation or give you any more information, you need to know the cost effectiveness of what the high deductible is for the employees currently working for Wayne County, not using their insurance, what it is costing Wayne County to pay for this insurance. And because of them not using the insurance, what it's costing Wayne County with its current employees that are currently here, not using it what they are incurring in their fees for the non-usage. And I thank you for your time once again, and I thank you all for your excellent comments in regards to the budgetary issues that need to be looked at in allocating or recruiting employees. Thank you.
Anybody else would like to speak? Anybody else would like to speak? Final time. Anybody else would like to comment? Next item, Madam Clerk.
Adjournment.
Can I get a motion?
Support.
Been moved and supported. All those in favor? All those opposed?